trending markets are the best markets to trade. They are the easiest way to get lots of big winning trades. In this video, I will show you how you can use Excel, how you can use data to identify the best trading opportunities. I am Mark from Tradinformed.com and I help traders like you analyze and backtest in Excel. So let's get straight into it. I'm doing something a little bit different in this video. I am using a trading strategy that is specifically used to identify trends to find the best markets to trade. The strategy that I'm using in this video uses the principle of the EMA Ribbon. You've seen these on your charts. When you have EMAs of different lengths, all aligning to either show a nice long trend, short trends, or when they're all twisted together, a range-bound market. So these I am using to identify the trend. Now I'm using another EMA, a shorter EMA, and I'll explain in more detail how I'm using that to identify the entry point. So on the screen I have the backtest strategy on the QQQ. The QQQ of course tracks the Nasdaq 100, and we know that this is a trending market. We have tested it so many times before and we can see it just on the chart as well. So we expect this one to work well. So I'm going to just make a few changes here. We can see slightly longer profit target. We can change the EMA style entry. Now I'll just go over this again. We're using the EMA, exponential moving average, to identify our entry. We can have a retracement style, and that simply means that the price has closed below the 5-period EMA. Or we can have a momentum style entry, and this is where the price has closed above the 5-period EMA. And as I don't know which is going to be better, we can just use a checkbox to go between them. We can see here that the QQQ responds better to the momentum style entry. Many of the other markets that we're going to test soon will respond better to the other one, but we can at least test this. We can also use our exit conditions. This is something I've long been interested in, and at the moment I'm really interested in this idea of closing our positions, or at least getting the data on closing our positions when we are winning, when our trade is currently green, and when we are losing, when our trade is currently red. And there is no difference mathematically, but there's a big difference psychologically. So you must understand that you will think differently. I will think differently. More or less everybody thinks differently when a trade is winning and when it is losing. So it makes sense that we're going to have different criteria for these two scenarios. If the trade is in profit at the time of close, we need 2 consecutive bars of at least a gain of 2%. If the trade is currently losing, we need 2 consecutive bars of a gain at least 1%. So nice, easy to understand. So there we have a little rundown of the QQQ. I'm not going to go over optimizing this, but we easily could do as quickly and as easily as that, and seeing how changing things like the profit target affect the results. I'm just going to set it back to what I had more or less at the start. So we've got a decent setup. So this is our reference point. Now let's have a look at what I think this video is really about. I'm going to look at a range of different ETFs. So you can see on the screen here I've chosen QQQ, SPY, which of course represent indices, and then I've looked at the different sectors. So in the spreadsheet, in this model, all I need to do is check this box here and click Update Data, and it will run through and test each of these different markets one after the other using the same setup. On the screen you can see the results. You can see that I set this up for the QQQ, so I would expect it to work best on this, and indeed it is. It's showing we've got greens here, but XLK, XLF have also worked well over this time period. But don't forget, I'm not looking at this just as a trading strategy. Really, what I'm trying to do is find out the best trending markets, because the best trending markets are the easiest to trade. Simple as that. So we can look over a specific time period. I'm looking over a long time period, but we can drop down. So let's have a look at a more recent period. We can have a look at the period that every stock trader is going to be very familiar with. And this is roughly since the middle of March 2000. So we can see that, which one have we got here? We've got XLU, which has trended down over that time period, which is good to know. If we're trading with the trend, then we want to avoid this particular ETF. So here are the results. We can see that QQQ, SPY, XLK, XLF have all performed well, with the others performing slightly less well, XLU performing badly. So we can see we've got some data. We know where we can either trade these ETFs, or we can drill down into them and look at some of the constituents, and that is what I'm going to show next. I'm going to start off looking at stocks by looking at the big daddy of them all over the past 20 odd years, and that is Apple. So we all know that we all wish we'd bought Apple any time over the past 20 years practically, but we're looking at what the data shows now in terms of its trending compared to other stocks. So I'm going to set this up for Apple so we can refine this very simply. I'm not optimizing it, but I'm just setting it up so it works nicely for Apple. In fact, we may be able to, you can see we can get it even higher there. So we've got it working nicely for Apple, and I'm going to do exactly the same thing again, this time with a portfolio of different stocks. Using exactly this setup here, I'm going to do the same thing. So I've got a range of stocks here, all of them large caps, all of them selected so that I have good data over this time period. I'm not suggesting this is an ideal portfolio, but it's a way of demonstrating the process. So we've got some tech names, Apple, Microsoft and Amazon, etc. We've got Berkshire, we've got JP Morgan, Visa, etc. We've got McDonald's, and we've got some other unrelated stocks here. So I've got a range of different stocks. Once again, I'm going to check this box, run all markets, and all that means is it's going to go through each one of these. It's going to extract the data, put it into the model, run the test, and then run the next one. So here are the results. We can see that, okay, Apple is the standout stock. Fine, we set it up for that, but let's have a look at what the other stocks are showing us. We can see that all of the technology names have got, over this time period, relatively similar results. We can see that less well in some of the other areas, Bank of America, GE, Philip Morris. We can see that very quickly, very easily. These tech names have tended to trend better over this time period. Some of these other stocks have trended less well, with a few exceptions. Let's have a look. We could say Nike in particular, and Visa as well. So if we wanted to do the same thing we did before and just highlight winning trades, we could do this by going to conditional formatting and just choosing a color scale. You can see Visa here is showing very high number of winning trades, as is Nike. So these may well be worthy of investigation. But once again, it's nice to know what has trended over 20 years. Maybe what we want to do is find out what has trended over the past year and a half. So I'm testing on the daily time frame. If you're trading on the hourly time frame, you might want to know what the trends are like over the past 3 weeks, for example. So you can apply this to any time frame. Exactly the same principle applies. If we've got good trends on the time frame you are trading, you're going to have more opportunities to get good, big winning trades. I hope you enjoyed this video. If you did enjoy this video, please hit the like button and subscribe to this channel for more content like this, helping you to analyze the financial markets. And if you want more information about backtesting the financial markets using Excel, please go to tradinformed.com.